time for our House View segment. ET Now will now visit the top brokerage houses and get you insights from the top minds in the world of financial investment. Okay, and joining us today, Prabhat Awasthi, Head of Equity Research and MD India at Nomura Financial Advisories and Securities. Prabhat, hi, morning. Good having you on the show. We were just chatting with Sonal from Nomura, and she was indicating a 25 bips hike for the repo rate and a 25 bips cut in the MSF. Do you think a rate hike by the RBI tomorrow could spoil the party?
Well, I think that's pretty much consensus view at this point in time. So I think so far as market is expecting it, I don't think that will really have a major impact. If the rate hike is higher, then obviously, higher than 25, then I think it'll have a negative impact.
Prabhat, we've got record inflows in the month of October, 13,000 crore to be precise. That's over $2 billion. What explains this underlying momentum?
Well, I think the most important thing that sort of has triggered this rally has been the fact that, the taper from US Fed, which was expected, didn't happen. And from India's perspective, that was a big positive because, end of the day, India's, balance of payment situation is, requires easy monetary policy, or has required at least, given the fact that we were also running current account deficit. Secondly, I think Nikunj, is the fact that we got some good data on the trade deficit side in the last 2-3 months. So clearly there seems to be some positive data on the trade side. Thirdly, I think there seems to be a bit more confidence in terms of India's ability to ride over crisis after Dr. Rajan has come at RBI. So I think there is some more confidence there. So I think between these three, and finally, I would think that the earnings season, especially from tech sector, was off to a good start. So in general, it's not been a disappointing earnings season, and the tech sector was actually quite positive. And the rally, I think, if you look at the market move, part of it was driven by technology itself.
Within the IT basket though, Prabhat, TCS and infra, of course, have put up a very strong show. What about the others? Because as soon as HCL, Wipro came out with its earnings, we've seen a bout of profit-taking setting in.
Well, I think you got to understand that year-to-date of the market of 5-6%, the tech stocks are up between 60 to 80%, so there is bound to be some profit-taking. So you've got to sort of see this from the perspective of where we're coming from. There is no fundamental news which would cause a major sort of revision of people's ideas about how the sector should do. It was just, I think, profit taking, given the fact that we had very, very strong performance. So I wouldn't read too much into it, really.
Prabhat, normally opinions make prices, but right now prices are making opinion, and the opinion on the street is that we have an economic bottom in place and it's time to revisit cyclicals. Is there merit in that argument?
I think there you might be absolutely right, Nikunj, that there is, at 18,000 people had all gloom for India, and now at 21,000 it's all sort of, positivity being talked about. I would say that, you might have hit the bottom, but the bottom is going to be very, is going to be a bit prolonged. There is no major trigger for economic growth to revive. The only thing I can think of is that the global economy has bottomed out, and but I don't think that we really have a recovery investment cycle in store yet. And because of that, you really cannot bet on a secular recovery in Indian GDP. I think obviously people are looking for policy action, which might be missing till the elections are concluded. So I don't think that there is that much merit in the argument that we have seen a cyclical bottom, etc.
Prabhat, the government is looking at pumping about 14,000 crore rupees in public sector banks, hoping they would increase their lending capacity and also lower rates. Has that made PSU banks more attractive, or would you still stay away because the asset quality is still suffering?
So PSU banks, I think that is something they've been doing regularly. There is obviously some need of capital, and so the government has done it last year. They've done it this year. It's part of the process. It will not make a material difference really in terms of lending capacity because it's a small sum. Now, so far as investing in PSU banks is concerned, I think fundamentally the negatives on asset quality will probably continue for some time. While on the positive side, you have some macro economic indicators looking better than before. But on the balance, we think that there is still a case to be slightly wary of PSU banks.
Prabhat, is it time now to revisit mid-cap stocks? Not only they've stopped falling, mid-cap as a group has started outperforming. Do you think the beta trade in the market is over? It's now time to be more stock specific and focus on alpha?
Yeah, that is an interesting one because it's quite possible that once the market has reached a certain level and there is no major trigger for the market to come down, then people start chasing the second liner. It's quite possible that will happen. So I think, but Nikunj, you have to be extremely specific in terms of what you chase because growth will not be easily available in the marketplace. So if you have obviously stocks which are cheap, there could be move up because these stocks have underperformed for a very, very long time. They become cheap, so there could be some catching up which could happen as long as the overall macro situation in India on BOP etc. remains under control, which I think probably will. So I guess the select mid caps will probably continue to do well. So yeah, it's absolutely. I think absolutely agree with you that it makes sense to focus on specific stories.
Right. So Prabhat, do you think till the time we don't get a definitive timeline on tapering, when tapering will start and what will happen to tapering, this market is in a safe zone?
Well, I think market is where it is. It's not 18,000. It's 21,000. So to say that it's in safe zone, I think is to assume that tapering won't happen. I think let's put it in. So I think some of the concerns on tapering are completely off the table as far as this level of the market is concerned. So if you were to say that are we in safe zone, yes, but it's also priced in to a large extent. So yes, if tapering doesn't happen, market might remain here, but it's no longer as cheap as it was when the market was at 18,000. So the short answer is that yes, market might remain safe, but it's pricing in a lot of positivity on account of taper not happening.
Prabhat, we also finally seem to be moving in the roads sector. The road committee headed by Dr. Rangarajan should be giving their recommendations on stressed road assets in about a month's time. Would you advise someone looking to invest in the road infra companies or steer clear because of the government intervention?
Well, we actually think that there has been a positive movement. I mean, if you really think about it, there has been some amount of positive policy action in India. It's always time consuming. It always takes time. So we have seen that action in power, for example. We have seen the passing through of tariffs, higher tariffs in power sector, clear action on trying to stem the loss of SEBs, allowing coal companies, power companies to pass through imported coal prices. So there has been a lot of action in the background pushing Coal India to produce more, trying to look at ways and means of auctioning coal blocks to private sector. That's all in the works, right? So there's been positive movement there. We have seen oil prices rising. So I think that action is definitely continuing the positive side. I think it's the problem is that the policy prescription might be absolutely all right, but the implementation itself might be weak, at least till the elections are over. But I take your point that some of these companies and assets might be very cheaply available today compared to what they have, compared to last 5 years history. So and you can assume that any government which comes in next year will have to focus on reviving the investment cycle, and infrastructure will have to be a very important part of it. So I guess that selectively it makes sense to start buying asset owners in India, as long as valuations are decent. So we actually are recommending selective risk taking in India on asset owners, not really on capital capital goods companies because I think asset owners are cheap, and if the asset owners don't do well, then the investment cycle in India cannot pick up. And any priority of any new government's priority will be to basically get roads, power, etc. start to move, because these are sectors which drive the growth in investments especially in India.
Would you like to share names of the companies you're referring to?
Well, there are only a couple of listed stocks, right? So, I mean, we sort of don't, from strategy perspective, we just talk about what our sector preferences are. So, our sector preferences, as I said, are asset owners. It could be asset owners in power sector, IPPs. It could be, but you obviously have to look at balance sheets. But that comes down to specific recommendations. That's part of the basket. So we, for example, have ITNL, we have ITNL listed, we don't cover it. We have IRB, which is a listed stock. We have, number of IPPs, including Jindal, JSW Energy, etc. So we sort of think that these stocks will have to do well first before your capital goods companies start to pick up.
Prabhat, the final question. Do you think the monsoon euphoria in the system has been slightly overdone? Monsoons have been strong, but inflation has not come down, and so far we've not seen any uptick in rural spending.
Well, I think there are two things. One is that I think the rural spending is not doing too badly, I would say, because if you look at pure rural players like Mahindra Finance, or look at companies such as Hero Honda, which have more rural bias, are not doing too badly, despite the fact that the urban economy is not doing well. So I think, if not for that, you probably would have seen worse numbers. Like Mahindra and Mahindra tractor division is doing extremely well, and all tractor companies are doing well at this point in time. So I think, and also remember one more thing, that the rural economy is not only agriculture. There's a fair amount of, more than 50% element of non-agri economy in there, which is related to, for example, services and industry, and which is probably not doing as well as the agri part is doing. So I think clear distinction needs to be made in these two. Now, inflation, so far as inflation is concerned, I think inflation is largely concentrated in vegetables, some amount in cereals. But I think vegetable inflation can actually be very, very volatile. It has happened in the past when the rains have been very heavy, that we have seen, vegetable prices rising very quickly, but they tend to come down. Because, you won't expect onion prices to be stuck at 100 rupees forever. So I think there is, and the last thing is that the MSPs are not rising at as fast a pace as they've been rising for the last 5-6 years, which actually will ultimately start to temper down inflation in the overall economy. So I would guess that as long as MSPs are contained, as long as the crop is bumper, at some point in time inflation will start to stabilize and come down. So I'm not that worried actually about food inflation at this point in time. But obviously it's very high. We've got to look at the momentum going forward. But I would think that once the crop starts to arrive in November-December period, and the next crop probably will be as strong, because there's a fair amount of there's a good reservoir status in the country. The rains have been good, late rains. So I would guess that there should be some tempering there. So I think. The agri actually is helping to keep the economy at the level it's going. Otherwise, you probably have seen worse numbers for some of the companies in terms of sales.